What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Meta stock, ticker symbol META, on a variety of time frames in anticipation of the next trading day, Tuesday, April 9th. Alright guys, Meta is today's wildcard stock winner, voted on by you guys every day in the comment section. Meta won, so let's take a look here. It's down $8.09 per share today. That's minus 1.53%. We did hit an all-time high here today on this candle of 531.49. So let's pull out everything that the market will give us today. All of the bias, the directional bias, the volatility bias, the expected move that we can possibly get to get a well-rounded idea of what's going on in this name heading into tomorrow. Let's start here with the quick little volume profile analysis here on the 5-minute chart. By the way, guys, listen, if you have not done so already, please subscribe to the channel. I greatly appreciate it. Now let's take a look here. The moves that I'm primarily interested in is this little, it was really interesting. We got a fade, but in the midst of that fade, we got a wick that just quickly hit an all-time high at 531.49 and then faded back down. I want to take a look at that fade off the open, and then we're also going to look at this little recovery by default, but I also want to take a look at this late morning fade as well. Now let's pull up the volume here. Listen, bears, you guys are looking for, undeniable bias in these fades and then lower volume on this push. Let's take a look if the bears got what they were looking for here. Pretty contextual, honestly. We got a higher volume opening bar. That's normal. We get this contextual fade off the open into the kind of midday lower volume. That's very normal. So honestly, guys, on this opening move to the downside, this is very normal. What would have made this not normal is had we seen perhaps a little higher volume off the open. It kind of met what we got on Friday, just a little bit higher than Friday. And then maybe even meeting or exceeding volume on that second bar. But even we got that big wick, even that being the case, which tells me that this is a battle bar, meaning a lot of buying and selling occurring on the same bar, we still didn't get a tremendous amount of volume. It's still kind of stuck with that very contextual fade off the open. So listen, bears, there's not a lot of bias that's overwhelmingly supporting the bearish side on that bearish move. And again, I like to think about this as the volume profile does not necessarily have to be exactly correlated with the price action. It's kind of like peeling back another layer of the onion and getting a better idea of what the bias looks like in that particular moment, if there is any. Now, this kind of late morning fade, bears were looking for the same thing. Bulls were also looking for that not to be the case. You don't want bearish bias on the downside move to support that move because the move already occurred. You might as well have no bias at all if you're a bull, and you might as well have that supporting factor if you're a bear. And if we look here, guys, it's super contextual. The only pop that we got was kind of a match, a cancellation, a red, green, red candle, and then back down to normal. There's nothing there in the form of bias. So listen, if you're a bear on a red day, it could have been a little bit better here in the profile. And, bulls, it's already a red day. So to add insult to injury would be to have massive bearish bias in the profile. We're not seeing that at all here today. So let's move on to the 30-minute and take a look at the self-fulfilling prophecy psychological levels that me, most traders, and I think you guys will be paying attention to here tomorrow. So for the last couple of days, guys, we've been trading above not only the 200 period, but also the 50 period here on the 30-minute chart. We gave that up today. We came down, tested, bounced, and then faded beneath there on pretty average volume. Okay, bears, a little bit higher volume would have been best case scenario, but you still saw that fade beneath, and we now find ourselves approximately, if we take a look here, we are about, from a percentage standpoint, we're about 0.9% away from a retest of that 50 period, well within a single day's move potentially of Meta. So we have to discuss that. Bears, any retest of that 50 period, you guys want to stay beneath that, form that as a short-term resistance. So you want to see any volume on the retest is fine as long as you see a higher volume rejection. Whereas bulls, we want to reclaim that as soon as we can because that was a nice setup that we had. A little ascending 50 period, very psychological level on a heavily watched 30-minute chart. We want to return to that, right? Pushing further into all-time highs, ideally. So we want to reclaim that level on as much volume as possible. Get a low volume, low sample size of bets being placed on the retest. and then boom, a nice bounce with above average volume as the FOMO traders kind of pour back in and say, yep, we expected that bounce, we agree with that bounce, and the volume pumps up. Now let's move on here to the 4-hour chart and take a look where we stand. We currently find ourselves a little bit of extended pulled away from both of these. This 50 period is now entering a slowly but surely ascending position. And in the last few days here, this 50 period has, kind of held above that psychological round number of $500 to kind of help add a little bit of extra potential hang up in front of 500 as kind of an additional support level. So that's good to see. Bulls, a retest of that, that'd be fine, but we would obviously want to see a bounce. But the more ideal scenario is to either hang out up here flat or continue upside and force that 50 period to kind of come to us, right, and close that gap in between where the stock currently is and where the 50 period, that potential backstop, lies. Whereas bears, just getting that 50 period to kind of remain flat, not ascend anymore, really ideally. And then, the more near-term goal on the 4-hour would be to crack that 50 back to the downside and set up for a real test of 5, which I think is more appropriate, is if we talk about 500 here on the daily, which is where the real story kind of currently lies. So let's take a look. This has all the eyeballs, the daily chart. The 50-day moving average is currently hitting at about 480 right now. Obviously, if we can get that above 5 as soon as possible, that'd be a great thing to see if you're a bull. But expect that to take time and move slower on the daily chart. It's not going to happen in a single day. But look, the daily, it paints the most clear image. It has the most eyeballs, and if you really want to look at this with you really want to look at this with a simple view. Okay, what's the most obvious story here? Because that's the story that the most people are paying attention to. That's self-fulfilling prophecy mentality. 3 things, really. 520 is the immediate concern. I would love to see 520 hold just from like kind of a, it's not $500 a share as far as psychology is concerned, but it's a round number. Okay, 520 would be a nice little hold. We are well within range of pushing another all-time high. We're currently at less than 2.5% from hitting another all-time high. So bulls, that all-time high area is certainly a psychological area to watch if we can push into that territory. Bears, $500 is about 3.5% away. It's not 30% away. We have to talk about that because bulls understand that the bears, they're all looking at $500 a share. They all want this to be a 4-something stock yet again, because a break downside of 500 would not only set the stock up for a test of the 50-day moving average and or 480, but it would also discourage in the near term quite a few bulls, and that's the bears' goal, isn't it? Whereas bulls, what's our goal? Discourage as many bears as possible. How can we do that in the immediate term? Push into more all-time highs, right? As often and as high as possible. That's a really good way to discourage bears, and likely get some bears, squeezed out, or at least force more and more bears to cover, right, if they're positioned short. Now, last thing that we can do here is we can take a look at the directional bias coming out of the options chain here today, okay? So if we look here, we have 329,000 total contracts traded here today, 213,000 calls, and 116,000 puts. That's a pretty heavy call side bias on the overall ratio here today. Again, this is all just from today. All right. Now, one more thing. The short-term speculators, those far out of the money calls and puts, the short-term gambly style bets in the 0 to 20 delta range. 58,000 calls and about 53,000 puts. So slightly less overwhelming, still just a small call side bias. But on the overall, we're getting a relatively heavy call side bias, which of course is being helped out by those higher delta ranges, which is going to be closer to at the money and then deeper in the money, having a more heavy call side bias than those very short term. Listen, guys, if you get value out of these videos, again, please subscribe to the channel. Be sure to vote for tomorrow's wildcard stock in the comment section down below. I appreciate it, and I'll see you in the next one.